Today, we're going to talk about 3 stocks that are paying you more than ever to own them. We're talking about Kraft Heinz, Schlumberger, and Occidental Petroleum. Let's get into it. Guys, welcome back. We've talked about stocks on this channel that pay you to own them. We've talked about dividend stocks, but today we are actually going to be discussing 3 dividend stocks that are paying more than ever to own them, and they're offering significant dividend increases. Yes, you guys heard that right, so you're going to want to pay attention to this video. Thomas, Chris, let's start with an oil services stocks that 7 out of 10 people mispronounce. The name is Schlumberger. There you go. I'm not going to be one of the 7 people that pronounce it wrong. Comment Schlumberger down below if you're one of the 7 or not. Let's have some fun with that. But let's get on to the important stuff, of course. Thomas, why don't you tell us about this stock?
Well, of course, we had to go online and figure out how to pronounce that name before we could record our video, right?
Yeah.
But I think Schlumberger is a great pick for aggressive dividend growth. The company cut its dividend during the pandemic to preserve capital. Nothing wrong with that. Lots of companies did it. They've been raising the dividend since then. Also good news, but they haven't brought the dividend back to its previous glory. Right now, it's about 50% of what they were paying in 2019. Which suggests a potential of 100% dividend growth. The big takeaway right now from the oil field services sector is that they're in a super cycle that's driving revenue and margin expansion. Right now, Schlumberger's revenue end of its business has stabilized at the pre-pandemic level with margins that are about double. So I see this company maybe not making a really huge increase, but making some substantial increases over the next couple of years to get it back up to that previous level.
Chris, what do you think about this pick?
Yeah, I like Thomas's pick of Schlumberger. OPEC, big news this week was OPEC came out, said they have no intention of increasing production anytime soon. So energy stocks are still going to be the place to be in the fourth quarter and into 2024. I like Halliburton in this sector. They're a company that has recently announced that they're using digital and automation services to lower their CapEx spend and increase their free cash flow, which will mean cha-ching. Mm-hmm. They'll probably be increasing their own dividend in the next quarter or two. I think Schlumberger might have a little bit of better valuation than Schlumberger, but SLB is a good pick anyway.
Yeah, I think the whole oil field services sector is pretty good right now, but SLB definitely stands out for the dividend growth perspective.
Yeah.
Great insights on that one, guys. Thank you. Our next stock is, again, another oil and energy sector, and it's a Warren Buffett favorite here. It's Occidental Petroleum. Guys, why Oxy? Is there a theme here with oil stocks?
Yeah, right. There is many reasons to want to buy Occidental right now. Warren Buffett is only one of them. He's buying the stock for all the reasons that we're going to talk about today and more. But mostly what that is cash flow, debt reduction, and capital returns. The spike in oil prices provided Oxy with some serious cash flow. They had cut their dividend also to preserve capital. They haven't brought it back all the way yet. They're using that cash flow to pay down their debt. They bought back a double-digit amount of their preferred stock, and that spurred Warren Buffett to start buying. So the cash flow and the debt reduction suggest that Oxy could absolutely increase its dividend back to the previous level. I think they're probably going to focus on that debt for a little while first, but over the next couple of years, I would expect to see some pretty aggressive dividend increases.
Chris, do you have any extra thoughts on Oxy here?
No, not really. I mean, Thomas hit it. We've talked about Oxy a lot, but I think there's a reason for that, and that's people get confused and they think that Oxy is just a Buffett stock, and it's not. This is a valuation story. What I particularly like about Occidental right now is that it's undervalued in relation to the sector. It's not just undervalued relative to the broader market, like some other oil stocks. And that's, I think, where the real opportunity lies, along with the dividend increases, of course.
All right, well, moving on, this third one is not an oil stock. We'll switch it up here a little bit. It's a consumer staples pick. So we have discussed it before. That's Kraft Heinz. Thomas, I know you love this stock. So much so that whenever I hear news about this stock, I think, what would Thomas do? So let's start with you. There's not a lot of growth here. So it kind of seems that the stock has moved mostly sideways for a couple of years. So the dividend seems like it might be the attraction here, or do you have other thoughts on that?
Well, Kraft Heinz has been an interesting story for many years. I love it because of the turnaround aspect, the valuation and the yield. I see this stock producing a significant multiple expansion, as well as already paying almost 5% with an outlook for a resumption of dividend growth. So right now, I mean, really everywhere I look is a reason to buy Kraft. The value, the dividend, the analysts are buying it, the institutions are buying it. There is an outlook for growth and margin expansion. All suggest that it's a viable stock. Now, in terms of the dividend and dividend growth, they haven't been increasing their distribution since 2018, I think, when they cut it during the reason why it's so cheap right now. But the outlook is for the dividend increases to come back, maybe beginning next year. The outlook right now is for only a penny increase, but I think that would be a big sign, a big vote of confidence in favor of management and the company's turnaround. And so even without balance sheet improvement, the company's earnings have been growing. The payout ratio is coming down. There definitely is a possibility, an opportunity for Kraft to increase its dividend in the next year. And that will be a catalyst to unlock that price multiple expansion.
Chris, you and I actually spoke about this stock recently on one of our videos, talking about some Warren Buffett stocks. So do you have anything else to add with that?
This is a stock where, and Thomas alluded to this, you see this stock and you say, there's some things that investors can look at and they can say, I'm not really that excited about it, but there's a reason why analysts are recommending it. There's a reason why institutions are buying it, and not just Warren Buffett, but overall institutions are buying it. And it's one of those opportunities where, I kind of feel like it's our obligation to point investors in a certain direction. We're saying there's a reason why they're doing that. And this is an opportunity that you might not want to pass up while it's here and it's trading at a pretty attractive valuation.
Yeah, I think that's exactly right. And I think that goes for the entire consumer staples sector right now. It has been beaten up pretty hard over the last year. Many of the stocks are trading at long-term lows. I think that we're looking at a generational opportunity in a low volatility, high yield, cash flow producing sector.
All right. Well, I will be linking that recent video with Chris down below if anyone wants to check that out. I hope our viewers got a lot out of this video. I mean, if anything, they know how to pronounce Schlumberger now, right? But if you are interested in more insights, make sure to subscribe to our channel and hit that notification bell. And do not forget to check out the free resources that I've linked in the description. We are always here to help you make informed decisions. Thank you so much, guys. We'll see you in the next one.